I'm Dylan Marma, and you're listening to Operators and Allocators, a podcast dedicated to exploring how to make smart investment decisions and execute well in real estate and private equity. We'll be interviewing top-notch sponsors from various asset classes to understand how they think and the frameworks that they put in place with the goal of achieving above-average risk-adjusted returns. Welcome back to another episode of Operators and Allocators. I'm your host, Dylan Marma, and today we are joined by our very first guest on the episode, and this is someone I couldn't ask for a better first guest for. This gentleman moved to the United States when he was around 20 years old with $7 in his pocket. He then went on to get his engineering degree and his MBA, and while going to school, he began selling door to door. Not many engineers that you know that also go and door to door sell. He went on beyond that to lead a wildly successful career in fundraising for charities. And about 15 years ago, he left that career and began building a vertically integrated private equity real estate investment company. He has done thousands of doors of multifamily investment. And more recently, he has branched out into developing senior living. And he sees a world of potential in being able to help those who helped us, developing high quality senior housing and riding the silver tsunami. He's someone that I'm proud to call a friend of mine. And he was really the very first mentor that I had as I began to learn commercial real estate. So someone I'm very grateful for to this day. He pushed me to quit my job and pursue this full time about 4 to 5 years ago. So let's welcome on none other than Vinney Chopra.
Hi there, Dylan. It's such a pleasure to be with you, buddy. And I just want to pay gratitude, really, with the audience. I want to be public about it. You know, you came into my life about 4 and a half years back, and just brought so much excitement, and you said, Vinney, you were in San Diego at that time, I remember. And you said, I want to be close to you and so forth. And by you affected me so many great ways. We even did a lot of filming right here in our home. I remember we had some great time in San Francisco. I mean, those were special memories. And I'm so proud of where you are and where you're heading. I know you'll be a billionaire. Everybody listen to me. I'm telling you, you will be, and you've got started at a young age yourself. I started this business at the age of, let's say, I really kicked in high gear in 2014. Let's just say that. Let's call spade a spade, right? I had a partner which was like stymieing everything. We didn't do much bigger. But then 2014, that's 7 years back only, literally, guys. So what we have built, small or big, it's been just the 7 years. So I'm 68 right now. I'll be 70 next year. I'll be next month 69. So 62 was the year that I started. Hold on. If you're thinking you're old, no, you are never old. Colonel Sanders started Kentucky Fried Chicken at 66.
Yep. That's such a great reminder and message to a lot of the audience. I think people get in their head about being too young. I'm the example for the young guy getting started when I was 23, when I really started to seriously pursue this, and you got started at 62, and anything's possible, right? It's more of the mindset you approach it with.
It really is. It's the mindset. I mean, Dylan, you hit the nail on the head. I hope everybody listening to us totally just take a little bit time. I always say slow down to speed up. See, in the train of life, you have left the station, all right? You'll gain momentum on the rail, but you've got to make sure the engine is right. And we are heading in the right rail, in the right direction. Well, let's just take the rail analogy or a plane analogy, let's just say, because in rail, you have to go on the same track. Well, you could shift track and all that. But, in the plane also, we got to really make sure we are sure where we want to go. If we don't know where we want to achieve, what we want to do in life, then how are you going to get there? So goal setting is so big. And I know definitely it reminds me how great you are in setting goals and how great you were. Every time we met, Dylan, you would summarize. You would summarize every conversation. And that's amazing, So the key thing is mindset. You got to just make up your mind right now. Are you happy with the last 7 days performance of yours, or last month, or 3 months, or 3 years, or 30 years? I don't know. 30
Mhm.
is too much. But what you want to do tomorrow, it's more important what you're doing today. So we got to live in the present. We got to live in just now, and then say, I want to change it. I'm okay with this, but I want to do more for my family, my everybody around me, and all that. I'm just get so revved up.
No, I completely agree. And I think you hit on two things I want to emphasize. Number one is getting in the right vehicle, right? There's plenty of jobs that no matter how hard you work and no matter how much of your life you commit towards that, it's a very predictable future of where you're going to be 5 years, and there's a ceiling that's stopping you. It's crucial, even if it requires, like you said, taking a step back or slowing down to speed up, to put intention into the vehicle that you're pursuing and where you're spending your time. And sometimes it takes us facing tough realities to come to that truth and then change the vehicle. Two, you mentioned taking notes. And I think that's something that to this day I try to emphasize for our team members is if you're listening and you're getting all kinds of valuable information, just making sure you're taking notes, you're taking time to digest your notes, because there's so much to this business and we're constantly learning. So it's crucial to have some kind of way of being able to go back and write down your notes. Or I know what Vinney does a lot of notes in his iPhone, the iPhone CRM. Maybe you want to tell us about how that's helped you over the years?
Oh my gosh, Dylan, I mean, my whole life is on iPhone. I mean, I can scan, I can DocuSign, Easy Sign. I mean, I can converse, I can send emails. I mean, everything, Dropbox, business Dropbox, everything is there. Every picture, everything. I have like 67,000 pictures. I have maybe 2,400 videos, all that stuff, right? But the CRM is amazing because what you have when you're talking to people, it's your iPhone. You're talking to them or you're conversing, you're doing Zoom meetings, then you try to put as much information under the contact. I love to add fields of department and the company and some other stuff, right? And there I write down their wife's name, their children's name, their ages, their birthday. And I like to find out how did I come to know them? Is through LinkedIn or Instagram, or they call me. I had a Zoom meeting. So I take these notes. There is a very good place where you can copy and paste into notes everything. So a lot of people who contacted me 9 years back, literally, I can go back at their contact. I copied their text to me and I send it back to them. I say, you know what? 9 years back, you reached out to me. Where are you now? So it's
incredible.
amazing. It's a great CRM. Yeah.
I think that's so important because those years will fly by and you may feel like you don't need to take notes down because you will remember it next week or in a few weeks from now, more than likely. But when you start looking years down the road, you realize that there's brokers that you lose touch with or investors you lose touch with. And it's crucial to make sure you have those notes early on because they're going to pay dividends for you down the road. Okay. Now, Vinney, I want to dive more into your story in a bit here, but share with us where you are today, because I actually did that bio just off the top of my head. So I don't have the numbers of where you are today. So let's give you a moment, just open up and share how much total multifamily have you done and how much of the senior living have you done thus far? And I know you also are putting together a fund right now. So maybe open up to us a little bit on what that's going to look like.
Totally. With the grace of God. Again, when we are thinking about the right vibes, we send out law of attraction, I call it, out in the cosmos, and then things happen for you. But goal setting is so important. Goal setting and accomplishing them on a daily basis. You got to live in the present with Eckhart Tolle's book, Power of Now. But the key thing is, you're right. I started, everybody Some of you know me, some of you don't. I started in single family home for 35 years and then made a decision in 2005 or 6 when I became a broker that I'm not going to do no single family. I was looking into different commercial things, being an engineer, and I just said multi-family apartments, everybody needs it. How can I have 20 homes in one place and all that stuff, right? So we started with a duplex, we still own it, and then 14 plex, 14 units for 180,000. And we closed on 2.4 million deal, 109 units same week. But now we are into 52 million deal, 35 million deal. I just purchased 34 million 850 in Austin, Texas, 9 months back, literally 9 months back. It's worth 9 million already. What? You say, Vinney, what the heck are you talking about? We bought it for 113 a door. We are underwriting right across the street and nearby 153 a door after 9 months. The things have just compression of the cap rate has gone. So that's my fundraising. I mean, on the fundraising, on my units, we are about 4,700 units, but then we are selling them also, cleaning out and, giving, I just wrote a check for initial money back and 51.88%. I just did a posting also in 3 years. That's equity gain of close to 90%.
Wow.
Not the cash flow, that's separate. That's just the equity gain. So it can be done from 2017 to today. Yeah, in the senior living, what I've been doing with the demographical shifts happening, and I read a lot of research and all. Dylan, as you know, one thing we are finding is that so many baby boomers are turning 65 every night, 10,000 of them every night. So that brings about 4 or so thousand every night are turning 85 and so on. So whole population in USA is aging. And with the technology and everything, people are going to be living longer too. They're healthier and things like that. So that's one way, which is silver tsunami, like you mentioned, which is amazing way we are caught on already. And we found a partner, great one. He's from Pakistan. He came at the age of 17 into this country. And then I came from India at the age of 20 or 22 right here, and we are now partners. He's been developing senior living space, 23 of them. He's built it from scratch. So it's great to have a partner who has a lot of experience, and then we are able to bring money and investors, and now we have joined at the hip. So that's where we are. We had 0 COVID death in all these 14 facilities we were managing during COVID. Now, even the COVID with vaccination and everything, a lot more opportunities are coming. The assisted living. We are only in the assisted living. I wanted to mention the senior living can be come into play. One is independent living, 55 plus or 60 plus, condominiums or golf courses. That's another one where nothing is required for assistance. And independent living is the big one where people can afford and live. Then the next one is that need driven. When a spouse passes away, or if somebody has a slip and fall, they they cannot cook, or they need assistance in dressing or in prescriptions or food and all that. So that one, and memory care is the middle spot that we chose to be in. We are not in the nursing homes. We are not into rehab centers, because that is a big business by itself. It's just not the real estate, but it's got doctors and nurses and equipment. It's a whole different ball game. We don't want.
So you're mainly focused on both assisted living and memory care?
Yes.
Okay.
Every facility we built, 88 units to 92 units, about 18 to 20 units is memory care on the right side. And there are about 4 to 6 courtyards, because it's only one story. We don't want our seniors to be in second, third, fourth story, because then all they do is go to eat and 3 meals or something, and then they are on the window watching, through the window. But we want a very active lifestyle to be in the movie theater with their friends watching shows, or to be in the spas or the spa and the salons and all. We build it. Meeting rooms, there are like 5 to 7 meeting rooms and dining rooms, all that. And then there are courtyards with a swimming pool, putting green, a lot of good luxuries, and we want to offer it at reasonable price, at an affordable price.
So who is your target customer? It sounds like you're not doing any of the government assistance stuff, right? You're doing private only. Who is your target customer, and what kind of markets are you building in?
Very good point. We do capture rate studies, and we try to look at the demographical shift where people are moving, the seniors, the warmer climates, definitely. Virginias, the Carolinas, then of course down south to Florida, big time. Arizona, Texas is so hot, right? Even though our partner has built in Michigan, because he's from Michigan, we have built so many over there. Hampton Manor is our brand, by the way. Hampton Manor. I was just over here. I just saw it this morning. Yeah, it's our brand and everything. Everybody can Google. But the thing is, you're right. We are looking at demographical shifts, and we are looking for, when we go to a town, we look at what kind of facilities it's providing, what they are charging. Then we do a capture rate study of their net worth. Who can really afford to pay $4,500?
So you're looking at net worth, not income, right? Because at this point, a lot of them are retiring. So it's not about median income anymore.
Nothing with income. They are retired community. And that's the other part, Dylan, is that we are buying multifamily with the workforce, right? With the jobs, which I've been chasing for 14 years. Now we are going after jobs, buying those multifamily conventional, and then senior assisted living is non-working class. So these are different demographics, no companies around there, no jobs. But
where do you find the net worth information?
Oh, it's very, very everywhere. I mean, there are so many data sources that our consultants are able to find all those data as to, how much the net worth is in that area and all that. So like, for example, Williamsburg, our net worth of the seniors is $1 million to $7 million. Wow. So most of our communities attract people within 30 miles.
Is that what you're targeting? Are you targeting a minimum of $1 million, or are you targeting something a little bit lower than that typically?
Very good point. I would say that majority of our seniors, Dylan, we vet them for 3 years of rents. So that's another good thing, because we don't want them to go from one site to next, right? So we take due diligence on their health, that they are assisted living, not crucial, the rehab and other stuff. The second thing we do is 3 years of money or rents, so that they don't have to move around and all.
Upfront, or just make sure they have it.
Upfront.
Wow.
Provide, those, and many of these things are their insurance, long-term insurance, or reverse mortgage on their homes, and the family pitches in too.
Do you help facilitate those transactions, or do you usually leave it up to them to figure out?
That's a very good point. We suggest. I think we cannot be like, but we do tell them that this is what other seniors are doing. And that way it opens up their mind, definitely. And then they get their financial planners and attorneys involved in that.
That's great for you and for them. You're showing them solutions, and I'm sure it gives peace of mind to the family knowing they're taken care of for multiple years at one time. And especially if you're targeting net worth, it's not coming out of their paychecks anymore. They have it there. It's just a matter of tapping into that. And that 3-year payment will cover them for, is that typically food, living, everything all in?
Oh, I'm so glad what you said. $4,500 to $5,500 is what we are charging now in Florida, in Michigan. And that covers 3 meals, snacks, cooked to order by the chefs, 5-star dining, totally 5-star dining in the big, meeting, dining rooms and all, chandeliers. I mean, it's amazing. We'll put some videos if you don't mind. We'll give it to you if you want to put the link.
Yeah, we'd love to share some videos in the show notes.
Amazing. We have one video of construction all the way 9 months, how quickly we build these. And the other one is already finished deal, what's inside. I hope your audience
So
is,
from the time that you start the building, it took you 9 months to completion.
yeah, 9 to 10 months total. We have our own GCs, and we put about 100 to 150 workers on the job every
Wow.
day. I mean, we just very fast. Like Punta Gorda, we completed 60% within 3 months. 60%.
Wow. And that's a big team, 100 to 115 people. That's a huge team all at once. So I love to see the efficiency you have. And it sounds like, I know in multifamily, you started off vertically integrated. And that was always one thing that amazed me, was that you were able to do the number of transactions you did, but also manage them all at the same time, because we know how much additional bandwidth that takes. In this case, are you also operating the properties, or do you have third-party companies that operate the properties? Who prepares the menus and does the cooking? Is that all done in-house, or how do you handle all that?
All in-house. Oh my gosh, all in-house. The exciting part is that, with our partner, he's been doing it so long, we have perfected the system. I say that. So once the building is, of course, from the capture rate study to buying the land, like Shahid and I are buying land, locking the lands at next locations now, 1.2 million, 1.4 million for 7 acres of land. We have locked in so many of them already. Then we start, you have to get him on a 6 to 9 month lead way to close on the land, because we need to change the ordinances. And if the permits are gotten and the ordinances are changed, then we close on the land and we get construction loan and start building. Once we are 65 to 70% built, we hire the staff, the leasing agents and other people, marketing people, so that we can start now vetting, because we have built so many of them, we could show them what it's going to look like, the experience in our Hampton Manors, right? So we start advertising and start getting the leases going before even the full 100% completion is there. We have certificate of occupancy the day we might have 40% lease already.
And I imagine that's a heavy staff that you're putting into play. I'm sure you must have a full-time HR on the ground, constantly hiring. If you have, say, 100 units, I would assume we still call them units of assisted living.
Yes.
How many staff members is that?
55. But remember, we don't need all the 55. Majority of them are caregivers. And we train them 6 weeks, our own stringent
55
guidelines to teach them. And we pay them $1 or $1.50 more per hour, because we want them to stay with us in that community. So we hire locally, because they cannot live at the facility. They have to be nearby, and then they drive to the facility or get dropped off and all. We have 3 shifts, right? 24 hour. So 8 hour, 8 hour, 8 hour, or 10 and 10 and 4, like that. So majority of our, only one nurse, even a nurse not required by the state laws, but we do have a nurse for the 8 to 5, one nurse for the evening, nighttime, and then we have one for the weekends. We want to have that. And then we have 2 chefs and some helpers, 2 or 3 helpers underneath. And then we have, executive director, administrator, all those great people.
Is it similar to multifamily, traditional multifamily, where you'll have still a regional manager, or do you have more of like a general manager on every property that's a really high level person organizing all the shifts and so on?
Excellent. Excellent. See, once you get the whole system going, let's just talk about really good thing now. What it is that we have 0 delinquency in assisted senior living multifamily, because the money comes on the first of the month, every month. 0 concessions, because this is a needed, a need that there is there, and they already know how much they're going to be
You vet
paid.
them well up front. Yep.
We vet them already. 0 maintenance in our case. The reason is because we build them brand new, A++. So all appliances, everything is all taken care of. And then the other good part is the regional manager or executive director, we call it. They can oversee 2 or 3 facilities when we can have other managers underneath there. So it's a very similar to running a multifamily. The only thing is in multifamily, we rent the units and we hardly see the residents. In this situation, we rent the units, but we see our clients enjoying every day. And we have grand pianos and we bring outside, groups to do songs and dance and all and music. And then we take them out for excursions. We have our own transportation, by the way, at every site. So it's just a wonderful feeling of community where our residents, 88 or 70 or 90, they become friends. So it's a community, appeal in a resort. Let's just say that for $4,500 or 5,000. A lot of people say, Vinney, can I get there right now?
Yeah, it sounds like you're providing so much for them. It sounds like you're really setting them up with a great living experience. And I know for you, that's something you're passionate about, is the impact you're making.
We want to spoil the generation that has spoiled us. That's been the motto of Shahid, our partner. And we believe the same way. Our seniors have worked so hard all their life, and this is their golden years before they pass away, literally, because from our site, either they die, they go to hospice, or they go to memory care, or they get very sick, then they go to hospital. So our sites are near to the hospitals too, by the way. So there is a very good, a curation and finding the right piece of property and land to build on. And it has to be 5 to 7 acres of land because we will never go vertical.
So this is not a beginner's game. And I think anyone listening at this point is well aware that this is not just a real estate investment. This is a business that you're running. 55 people for 100 units is a lot, right? There's a lot of organization that goes into the development and a lot into the operation side of things. For someone listening that has interest in getting started actively, are you a proponent of doing a smaller facility? Is there any way you would suggest for someone to get started in that? And if they're interested in passive, what are their options to get started in that method?
Thank you, Dylan. Definitely, I would say, I've always believed in multifamily. More doors, more units, and that's why I'm in hotels also. We buying hotels. That's also multifamily. It's multifamily. You get paid for each day of people living in, and they pay you at the counter. So very excited about that. But the other thing is, you're right. We definitely want to make sure that we are starting small. Please don't do what I'm doing. The reason I could do was because I got a great partner who has done it for 9 years. See, and you might find some partners like that, definitely, but send out those messages out. I would highly recommend you want to start in residential side of the assisted living. There is a big need for that also. And 5 beds or 5 bedrooms or 12 or 14, units where you could even do conversions of the houses. A lot of studies are there on the internet. If you're really interested in senior living, please go ahead and Google and you'll understand so much about it. And you can reach
You have a book on it now as well, right?
Yeah, actually that book is about to come out. Yay.
Okay.
Yeah, Senior Living Investing Made Easy. So we are very, very fortunate that, as a sequel to my syndication book, Vinney's always a promoter, right? But you're right. Dylan, there is so much to be gained. I hope your audience will catch the fever because this is going on for 30 to 40 years from now. It's going to be such a big demand and nobody can build them enough. That, I was just mentioning about that 230 door. We got LOI yesterday and we are not even 70% completed with that facility at this time. So people are already looking at, and the senior living multifamily performs much better than multifamily also, by the way. Even though the thing is, see, rent is not just 1,200 or 1,400, you're collecting 4,500.
Yeah.
But if you know the business right and you can cut the expenses, right? Do it right and make sure you are providing that experience.
What are the margins on that, if you can give a ballpark?
Totally. See, for regular conventional multifamily, about 72% occupancy will break even. And then after that, you're able to make
Mhm.
profits. In the senior assisted living, it's about 52%, 20
Okay.
points down. Wow. So there is a huge, huge potential of making good money, returns for the investors and all. Like you said, how can people invest with us or like that? We are doing a 506C, C for Charlie, so that I can talk about it very
Mhm.
freely. And that is for accredited investors investment only, where we are doing a hybrid approach, a diversified approach in the fund. Why did we decide on that? We are buying conventional multifamily. We are also buying ground up in the same fund. So our money from the investors is put into conventional cash flowing deals, into the startups. We are also buying already built assisted living that we built it
Mm.
at fair price into the fund, and buying hotels. So
Oh, wow.
if an investor puts 100,000, they don't have to get stuck with only one asset. It's
Mhm.
going to be a little bit money going into all these four areas. And it's a 50 million. We are only raising 12 million. We raised 10 million in just 2 weeks.
That's amazing.
So
Love
we
it.
do have
And I
some
think
room.
that that's the beauty of a fund is that you can blend together different risk profiles because some of those deals have the development risk, whereas others are more operationally intensive and others are less operationally intensive if you deal
Yes.
with traditional multifamily, right? So you're getting a blended diversification of returns and you're in different asset classes, which I think as an investor is always very nice to have. So you are still accepting retail
We are.
investor capital at a hundred
Totally.
thousand minimum, it
Yep.
sounds like, right? And you're mainly funding using that. You're not using institutional groups at this point in time. Is that right?
No, not at this time, actually. I really want our investors. We have over 400 investors with the grace of God, and more people are coming into the fold also. They're, watching my podcast or listening and all, reading my books and all that. So that way we are capturing quite a few more investors
Mhm.
also. But you're right. I think institutional, if anybody's listening to us, please reach out to us, because that will make it even bigger and better. And our institutions usually go for 5 or 6% returns. We can give you 8.5% or 10% returns
Oh yeah.
because of the profitability of the fund. Yeah.
And I know you're selling to institutions in many cases. I believe you've had offers from REITs, if I'm not wrong on that. And tell us about your exit strategy. What's the hold period and exit strategy?
Totally, totally. Dylan, actually, our fund is, holding period is 5 years, 5 to 7 years, because we'll be refinancing. See, the thing is, when we build something for 15 million and we occupy in senior assisted living, it's worth 22 million. Hold on. So we
Wow.
can refinance after about a year or year and a half and pull out the money, and then we just have a bigger mortgage. So what,
Mhm.
right? But the debt equity is now flowing into the money, into the fund. So we'll be able to diversify and invest that money again. But those investors who want to cash out after 5 years, no worries, because we'll have.
Ah, okay.
Yeah, it's a very exciting way. We have developed this whole fund. The properties are in different states, different locations, and then there are four different categories in between. So it just mitigates the risk, and our
Mhm.
investors can sleep well at nighttime. And we do quarterly meetings, and we got portals where they can see the drone footages of what's happening in all aspects.
Yeah, and I was going to ask you about the reporting. I know that's one thing I've learned a lot from you on is how to effectively report to investors in a way that keeps them coming back and gives them a sense on what's going on in the day-to-day properties. So you want to share with us what your reporting looks like, best practices?
I would love to, and maybe even give a link to one of the recordings. Maybe
Mhm.
investors can watch
That'd
that.
be great.
I take a lot of pride in doing those quarterly meetings presentation. I design myself, and my team designs them. I even make the whole frame. By the way, that's a good nugget. Please don't take a regular template of the PowerPoint, but design a scratch PowerPoint with the pictures of the property on the right side and at the bottom, and your logos and all. So that's your master template. And now you build on it. So
Mhm.
my thinking was, if I can bring the property to my investors every quarter, remind them where they spend their invested their money. And when I travel, I take a lot of pictures and videos. So I bring the property to my investors. Like I said, I have 400 investors. Guess what? How many people went to the 34 syndications I've done so far? This is my 35th one. Nine investors might have gone to see any property ever last 14
Mhm.
years just because I bring the property to them.
Yep.
So every quarter, they are used to getting these great pictures of the staff and the CapEx things and what we did and all that. Then at the end of the PowerPoint, the next nugget is I always sell my next thinking. I just thought about it, 14 years back. If every investor is going to watch the PowerPoint presentation anyway to the end, why don't I really put the websites and other stuff, what my thinking is, where I'm going to be buying next, and sell
Mhm.
my next deal with the same investors? And that has been the recipe of my success. So I always got my investors hooked on to the next deal and to the next deal and to the next deal. And that has really blossomed,
Yeah. And I think one thing that you've done well too is done a lot of planting seeds as to the markets you're looking at or the industries you're looking at. I know you're always reading articles and doing homework, and you're methodic in the sense of you're not just buying deals, you're buying, in many cases, markets with good deals in those markets, right? You're looking at where is the puck going, so to speak, and how can you position yourself to benefit off the growth in the market or the industry.
I totally agree what you just said, Dylan, because the money needs to flow with us. We syndicators are only as good as the money flows with us into markets, into positions, into the emerging areas. So it's so important to bring the best of the best slides to share with them why we are going to Atlanta, for example, right? I was in Texas so many years. Then we went to Florida. So I had to really educate my investors, and that took little time, but they were ready. Oh my gosh, we did 16 million in such a short period of time.
Mhm.
So you're right. I think by newsletters and sharing those, links to the studies, because people are logical and emotional. We want to make sure we, give them both. They will come and join you and give you 200, 400, 500. My investors are giving me 700,000 in a deal now. That's ridiculous, totally ridiculous. But that's what they believe in. They said, hey, Vinney's done the research or whatever, and then, and all that. And then we also do tier investing, if I may say that, Dylan. Tier
Mhm.
investing means starting at 100, then 200, then 500. Aha. So we give higher percentage. We used to give like 7, 8, and 9. Now we are doing only 6.5 and 7.5 because of the markets we are in and everything. Cap
Mhm.
rates are down and properties more expensive and everything. So what we do is 100,000 at 6.5, 11 IRR, 70-30 split. At the threshold of 11 IRR, we go 50-50. So we reward ourselves at the back end for reaching our investors' first high, returns.
Mhm.
Then at 250, Dylan, this in the fund, we do it 7.5 preferred. Aha, seven and a
Mhm.
half for 5-7 years, and then another 7.5 per year we are projecting to give them when we return their money. So
Mhm.
that's 13% IRR. And then it splits into 50-50. So there are very, very strong returns that we build it because our investors are savvy. They get bombarded with so many different deals out there, right? And they're also educated. Mostly they are accredited investors. Out of 400, maybe only 30 might be sophisticated in my case, but 370 are accredited. But
Mhm.
the thing is, they are savvy, they know what they're dealing with, and that's what helps them to feel good about.
I think that makes a lot of sense. And you definitely want to be able to reward those that are writing bigger checks or those that are coming back and investing with you as much as you can. Now, last question I have on the senior living side, what is your USP or unique selling proposition? What makes your community stand out from the competition?
Very good point. I'm so glad you asked that, Dylan. See, the thing is, majority of the senior assisted livings are 35 years old or older. Majority of them, and they are residential, lot more than anything. And it's very hard to really provide
Residential is in active living, like the 55 plus with no additional amenities.
Yeah, exactly. Not only that, I would say even assisted living in the business.
Oh, residential is in they're smaller too.
They're smaller,
Okay.
exactly.
Yep.
They're
Yep.
smaller, like 7 homes, 7 rooms, a house. They expanded on it. They have a dining hall, one dining hall. They have communal bathrooms. Some of them are stinking. I mean, all those things, right? And how much the revenue they get, that's how they can afford the food and other stuff and all that stuff, right? Make a profit also. In the commercial side, which we are building, revenues are $4 million a year. Hold on. For 88 units at 4,000 a piece, that's 3.2 million. So there is a lot more money coming in so that we can really distribute and give the best experience to our residents.
You can probably negotiate more economies of scale on pricing for food. You probably can hire higher caliber staff and so on, right?
Totally, totally. So that's where our uniqueness is. When we come out, a lot of people want to give notices to these old, facilities, because for the same price, a brand new facility down the street with all these amenities opened up, so we get quite a few, people transfer into ours also. We're kind of sad, but we are only looking at giving the best experience for the money they can afford. So we are very different in that. We have only one story with 3 to 4, 5 courtyards. And, we have all the facilities, the spas, the salons, the movie theater, the library, the game rooms, the grand pianos, and the meeting rooms, sunrooms. I mean, you name it. And we want our residents to even grow their vegetables and flowers. We have an active life, just like they're living in their own home. Even though they're tenants, they're residents of our community, but the appeal and the service they get from 55 caregivers is unheard of, really. They become their friends and they rely on the nurses and nurse and the executive director and the chefs, and they meet in the morning and chef asks them, what would you like to eat today?
Oh, that's great.
They can bring their own recipes and the chefs will cook for them.
I'm already looking forward to 65 now.
So praise the Lord, I mean, at this age, I'll be 70 next year. I'm so fired up, that, we can really make a big difference in the lives of seniors. I'm a senior myself, but I want to really, help them earn money by investing in the fund, and we'll be closing this 50 million fund. Then we'll do another 50 or 100 million fund. I really have bought into the system because it's diversified. It mitigates the risk.
Yep.
And the good part is that it will have different classes and different locations, where people will be able to enjoy.
Yep. No, that's excellent. And we're actually wrapping up the raise on our first fund. Very, very similar thought process there. 2 different classes of investors. We had different deal types, some that had more upside, some that are more stable day one, and so on. And I really have became a big believer in the fund model, and I think there's a lot of value for it. It can be a little overwhelming as an investor, maybe, to take in at first. You might say, "Well, I don't know if I can figure this out," or "That sounds confusing to me." But I think when you really start to understand that you're getting a piece of every deal that Vinney touches, and seeing that you're going to be there for the home runs as well as the singles and the doubles along the way, you should end up with a nice blend of return, right? So
Totally, Dylan. And the exciting part also is that like we have a 3-year timeline, right? And 10-year timeline on that side, because people can come in. The exciting part also is our investors love it. They only fill out the paper one time, just one time, and they can increase the level of investments in down the road after 4 months, 6
Yep.
months.
Just send an email and
Yeah,
it's
just send
done.
an email, and there
Yep.
you are in. And you now have bigger piece of the pie. And like, our deal over there in Maitland, we bought for $52 million 2 years back. Literally, June the 27th, my book was released. That was the day we bought that $52 million deal too. And now we are going to be looking at selling for 63 million.
Wow.
63 million. Hold on, in 2 years. The deal I bought in Melbourne, Florida with my partner, 35 million we paid. We could sell today for 8 million more today.
Wow.
Not even 2 years yet. I bought it in December. No. December 15th of 2019, just before
Wow.
COVID. And we've been collecting 98% of the rents over there. That's why I went to Austin.
Melbourne's on fire. Yeah.
I know. Melbourne is on fire. And then Austin is on fire. Everybody knows, your audience knows that.
Oh yeah.
We got there last year during COVID. We closed the deal September 15th or 20th, whatever, of last year during COVID for 34 million 850. The brokers are calling me, Vinney, do you want to sell this for 8 million more? 9 months later,
Incredible.
mind-boggling for me, really, So
Well,
your audience is very amazing. I want to really pay gratitude to them, to you, and to them to really follow you. Dylan, you're a superstar. I want to really thank you for starting this podcast. And, I've been so blessed to have you in my life, and, where you're hitting and with this fund and, all these different things. And it's just, sky's the limit. And I'm so glad that, you're diversifying, because, that way you will give your investors some spectacular returns.
completely, Vinney. And I don't think I'd be this far along without you. So I definitely appreciate that. And I want to leave you with one final question before we share where we can hear from you. What is it that's driving you today, right? You said 70s, a little bit over a year away. You're turning 69 next month, and you have, I'm sure, accumulated enough to retire multiple times off of today. So I don't know if it's the money anymore. What is it that is really getting you up out of bed every morning and putting in the work you do?
Thank you, Dylan. I just believe in the mindset. I need to be a productive person. I need to stimulate my mind. And if I just can't watch TV. I have ADD, literally. I may just watch the dance and the singing shows with my wife at nighttime and all, maybe CNN's a little bit. Everything is bad news. A lot of the things we look at and everything we fantasize, nobody wants to really, get into a rhythm. Anyway, I've got different soap opera on that one. The thing is, you've got to be really making a life, a worthwhile life. I believe that I never worked a day. I just enjoy. I totally enjoy everything I do. And this way, at the end of the day, if I put 17 hours from 4:30 a.m. when I get up, do my miracle morning, or 5:30 now, I'm kind of sleeping in a little bit, But the thing is,
What's your definition?
Excites me. The travels we want to do to charity. Oh, by the way, just started charity water fundraiser. If any of your audience would love to help us out, our goal is 15,000. I donated my first 5 to get it going. So we only need another 10 more to get to 15,000. If anybody would like to help out. So charities, travels, making a meaningful life for other people, teaching and giving myself, if I can, as little I know of things, and, motivating others and being a better citizen. That's what I'm looking for, literally. And this is just the real estate side. Hold on. I do want to tell you, I'm now into a lot of other stuff, into startups. Cloud Defense is my startup where I'm in the seed round. Hopefully, there'll be a $10 billion company. My very good friend, Anshu, right here, he will be very proud. We got 5 billionaires on the advisory board, billionaires
Wow.
on that one. Very excited. Another joint company we are starting right now. And can I say something? Is that
Yeah.
okay? This is a new partnership where our investors will be able to analyze deep into the property in 2 minutes. You say, Winnie, what?
Hmm.
Oh, yeah. You will be able to take the P&Ls and the rent rolls in any form you got it. And you will upload into this platform, and it's going to put in a minute everything in the right templates
Bucket.
and graphs and everywhere. And you can analyze, and that's going to be the life changer for lots of investors. So that's coming up very soon, very soon. And it's been already used for 2 years by the lenders, by Northmark and other companies and all that.
Nice.
And now I'm bringing it with my partners and we are going to Series A and everything also on that company. So that's very exciting. I wanted to just share that.
Yeah, no, it's incredible. It sounds like you have a lot of irons in the fire, a lot of exciting stuff in the works right now. And what I take is that it seems like you have built the habits, right? That you've built the habit of getting up early and applying yourself, and like you said, being productive, and you've fallen in love with it over time. And I think that it just speaks to itself that you love what you do, because I don't think you view it as work as much as you do something that gets you fired up and excited to put your time into.
So true, so true. Again, we all have the same amount of time. It's what we do with the time, the ROT. I'm very big on that. We got to be always looking at, where am I spending time? What's the return on time? How many hours in a day am I spending talking to brokers? How many minutes I'm talking to investors? If I'm not spending time in those two, and your attorneys and financial planner and all that, which is, lenders, that's separate because you got that going, right? You got approvals and blah, blah, blah. The biggest time we can all spend is the time with building relationship with the investors and the partners and with our brokers, literally. And that's the best time ever. That's the ROT and ROI.
Yep.
That's where the union is.
Deals and money.
Yep.
Definitely agree. All right. Well, Vinney, where can our listeners find you?
Oh my gosh, they can't find me. No. Well, just Google me, please. Just Google me, Vinney Chopra, V as in Victor, INNEY CHOPRA, Chopra, like Deepak Chopra. We are no relatives, but Vinney Chopra. Just Google. We have a YouTube channel which is growing like crazy. Instagram, Twitter, Facebook, LinkedIn. You can find me everywhere. And VinneyChopra.com is the website where you can meet me there. You could make meetings with me, strategy, free advice, a lot of great stuff. We are putting together this beautiful educational platform where we would love to provide everything you need to know for $447. Holy cow. You could just click on it and it will train you everything. You won't need to do nothing. And you will be able to then just get into the underwritings, which we have made very sophisticated underwritings on this platform, which will let you, use and as many unlimited underwritings done on the platform with a small monthly fee. And you get a discount of $100 by just using the code SMILE, because I smile a lot. So we are just $750 software, which we were charging. And some of the institutions are paying us $500,000 a year, $500,000 to use the same software, which we are bringing to America, into the world for, I think, $399 or something like that. It's just ridiculous. Yeah.
Very exciting. Well, definitely encourage everyone to go and check Vinney out, follow along with his journey. I know he's got a lot of content out there, a lot of books, a lot of stuff you can get your hands on. So definitely make sure to plug in. Vinney, thanks so much for joining us on today's show of Operators and Allocators.
Thank you. Thank you, Dylan. God bless you, brother. And be the best you can be. We all can be. And I know you are having the trail. You're blazing the trail, buddy. Take care.
Love it. Thanks so much. Thanks for tuning in and joining us on another episode of Operators and Allocators, hosted by the Requity Group, a vertically integrated private equity real estate company. You can find recordings of all shows along with other resources on our company website, therequitygroup.com, also listed in the show notes. A brief disclaimer to our listeners. Information presented herein is for discussion and illustrative purposes only and is not a recommendation or an offer or solicitation to buy or sell any securities. All investments are subject to risk and past performance is no guarantee of future results. The views and opinions expressed by the Requity Group speaker are their own as of the date of the recording. Any such views are subject to change at any time based upon market or other conditions. We hope to see you next week.